Welcome back to Majesty mentorship on liquidity. So this is lesson 2 of 15. If you are here to watch our previous lesson on element to trade setup, you can do so to watch it, because this is just like the continuation of the last lesson. So all these videos are helping you to become an institutional trader, transforming a beginner to pro. So let's discuss about liquidity. So what is liquidity? Liquidity is defined by stop losses. Where the stop losses exit is where the liquidity also exits. Smart money, bank trader, hedge fund, institutional trader needs to activate this stop losses of existing order in the market so that they can place their position in the market. Why did they do this? Just because if they want to place a buy position, they don't want any other people to place that same position with them. You understand? So for example, if institutional trader want to buy, we first sell. There's a reason for us selling that position at that moment. The reason just like want to kick people that want to enter the same position with us, want to take them out of the market. People that doesn't understand the reason why price is doing what it's doing, people that are not aware of what price is actually doing at the moment. You understand? So we are going to kick them out of the market, especially we call them a retail trader. So after kicking them out of the market, then we can place our entry, then you can place a buy position. So that's just it. So banks manipulate the price because of liquidity. But why? Bank negotiates large trading volume and sometimes find it difficult to find the other side of their trades. So they manipulate the price so that they can have their position in the market. Banks have to manipulate the price at that moment. Institutional trader have to manipulate the price at that moment. We can come in form of consolidation, just like to gather some liquidity in both direction, buy and sell. People that doesn't understand the reason why price is doing, like a retail trader, just like to set a buy and sell at the same time. So we have to take them out of the market, and after that we place our entry. And then there are some common words that is very common to trader like this. They will say, oh, price end up hitting my stop loss and price later go my direction. It's just because of liquidity. You understand? So they set their entry where there's liquidity. So let's continue. Forex market is a zero-sum game, which means that for a trader, institutional trader, to buy or sell one currency pair, it's necessary that they have another trader with an opposite position. If smart money, banks, institutional trader, hedge fund want to buy a currency pair, they will need a seller in the market. So if you want to place a buy position, there will be another party that have to sell that same position. You understand? If you want to sell a position, there will be another party to buy that position. That is just it. And those party that is opposing us mostly are retail traders, because they don't understand the reason why price is doing, and also people that doesn't understand why price is moving. You understand? So they're just using pattern, candlestick and all those stuff. So we have to clear them out of the market. So the existing facility to place this position in the market is called liquidity. So after liquidity, then we can place our entry, then as an institutional trader. So we have two types of liquidity. We have buy stop liquidity, that is BSL. We have sell stop liquidity, that is SSL. So I'm going to be discussing about these two types of liquidity right now, and also I'm going to show you guys on real chart after these theory aspects. So when we talk about buy stop liquidity, that is BSL. The BSL is originated by stop losses of sell order. After the BSL is taken, the market reverses to the downside because banks use the BSL to place sell order in the market. So I've said this earlier that if you want to place a buy position in the market, you have to first sell, and then if you have to place a sell position in the market, you have to first buy. So buy stop liquidity, that means you have to buy to take people out of the market. Then after we take them out of the market, then price out to sell off. So what to focus on for BSL? Focus on the previous month high, focus on the previous week high, focus on the previous day high of the day, old high, equal highs, and then swing high, and also retail resistance. You understand? Retail use support and resistance most of the time, so focus on those resistance. So price out to go above it, so you have to focus on it. So let's discuss about sell stop liquidity, SSL. So sell stop liquidity is originated by stop losses or buy order. After the SSL is taken, the market reverses to the upside direction because banks use the SSL to place sales order in the market. So that's just it. So what to focus on SSL? So focus on the previous month low, focus on the previous week low, focus on the previous day low and the low of the day, old low, and also swing low, and also focus on equal lows, that is a retail support. So every single time you see double bottom or true button, so focus on it because price have to go below it. So that's just it. So let me show you guys a simple path pattern so to explain this before going into the practical aspect. So BSL is taking, you can see these two paths that I draw here. You can see the first one when price was going up, and then after that price end up taking that previous high and immediately price out to reverse back. You understand? So that highs can be like a previous month high, previous day high of the day, or equal old high. It all depends. You understand? So it's actually a swing high. You understand? You can see that I label it as S represents liquidity. So every single time we use S in the market, it just means, oh, liquidity is here. So that's just it. And then you can see after price go above it a little bit, and you can see we have a very nice bearish movement that price have to reverse immediately. I'm still going to show you guys all this on charts. Then you can see the second one, we have equal highs. So every single time we have equal highs on charts, that means like, oh, as an institutional trader, just like a system of we taking a sell position, but you first go above it a little bit to swipe some liquidity, because a retail trader are going to call it like a resistance zone, or yeah, resistance zone, I'm right. So after that we go above it a little bit, then after that we push back. So that's just it. So let's discuss about SSL. SSL is taking here. You understand? You can see price was going all the way bearish before, and then after that you can see price swipe this previous low. Then after that you can see you have a very a nice bullish movement. So it's just like vice versa for the bullish condition. So that's just it. And then you can see the second picture, which is equal lows. Then after we have equal lows in the market, you can see that price go below it. Then after that price after to swipe those liquidity is called, I think, retail support. That is what retail trader calls support. Then after price swipe out all this liquidity, then we have a very a nice bullish market. So note this: when BSL is taking, market reverse to the downside, and then when SSL is taking, market reverse to the upside. So you have to know this and then understand this. Every single time you see that BSL is taking, price out to go down, and then every single time SSL is taking, price out to go up. But you have to know how to identify BSL and also SSL on markets. So I'm going to show you guys also this on the practical aspect. So let's go into the practical right now. So right now we're in practical aspect. So we use this interface to explain expansion and retracement during our last video, and then if you are yet to watch that video, please do so and watch it, because this is just the continuation of it. And also we discussed about liquidity in our theory aspect. We define liquidity as a where stop losses exist, that is where liquidity also exists. Smart money, institutional trader, bank trader, hedge fund, we need to activate these stop losses of this existing order in the market, so that we can place our own position in the market. Understand? So that's just it. So bank have to manipulate the market just because of liquidity. So as an institutional trader, you have to understand where there's liquidity in the market. So I'm going to be showing every single place that there's liquidity in the market. You understand? And then there are a lot of things like, oh, price end up hitting my stop loss and also going to my direction. So all those what you're going to avoid it. It's not going to be happen to you anymore. You understand? And then if you're like a retail trader, you can also put your mind in this, and then also know every single place there's liquidity in the market. So that's just it. So we have two types of liquidity. We have buy stop liquidity and also sell stop liquidity. So I'm going to be discussing about buy stop liquidity first. So during our last class, we discussed about expansion and retracement. We call this one expansion towards the downside, then retracement, then expansion, then retracement, then expansion, then retracement, then expansion, then retracement, then expansion. So we notice something, that every single price is respecting it because price is going all the way down. You understand? So this high is not going above this high, this high is not going above this high, this high is not going above this high, and also this high is not going above this high. So this is just like the two rules that I explained during our last video. Like during our last video, that price have to the laws that govern expansion and retracement. So those are the two rules. And then you can see that price have to be taking every previous low. Can you see? Can you see this low? The price end up taking this low. Price end up this low, end up taking this low, this low end up taking this low, and this low end up taking this low. Understand? But the high price have to respect it. So when you are talking about buy stop liquidity, it's when price did not respect the one of the high that price supposed to respect. For example, here you can see this high right now, price did not respect it. Okay, let me change the color to red. So you can see that this high price did not respect it. Yesterday we discussed about this during our last class. Sorry, my bad. During our last class we discussed about every single time we see this happening in the market, it means like price is about to change direction. There's no more going towards that direction again, and then the liquidity just like it's just like money seeker. You understand? We seeking for fund. We seeking for where people place their stop loss just to go and out for their stop loss. You understand? So that is just it. So every single time you see that price end up breaking a rule, you can see you can see that we are not expecting price to go above here before, but you can see that price end up going above it. So the next high for price to go above is this high. So every single time you see that price end up taking a previous a respected level, you understand? Every single time you see that happening in the market, you should know that price is already going above or in opposite direction, and then it's going to take every single respect level and levels. My bad. So we have another high here, price respect this high. Then we have another high also here, price respect this high before. You have another high here, price respect this high. Then we have another high here. So there's one thing you have to understand: the direction that price is going to in higher time frame before you can conclude that price is going to take the last high. Understand? So when we discuss about buy stop liquidity, I told you guys like focus on the previous month high, previous week high, previous day high of the day, old high or swing high, equal highs. That's a retail resistance and other stuff. So it's not every single high that price have to take. You have to understand the direction that price is going to in higher time frame. Either price is going to respect this last high or it's not going to respect it. But every other high price is going to take it. You understand? So that's just it. You can see that after that price end up taking this high here. Hope you notice this. Then price have to reverse back into a level of which I'm still going to discuss about this in another video, so for better understanding. Then after that, where's the next high for price to take? This high. Can you see? Then you can see that price just tap into the high to take the liquidity, and after immediately is sold up. Can you see? So where's the next high for price to get to this high? Can you see? Price just tap into it and immediately price back a little bit. So where's the next high for price to take? You can see this is the next high. Can you just notice that price is just taking every single high and then reversing back immediately? You understand? You can see that price end up taking this high and then immediately price reverse back. Price not take this last high. So we have to understand where price is going to in higher time frame. So let's check higher time frame right now. So in higher time frame, we can see that price is going towards on a bullish trend. On a bullish trend, can you see? Price is going towards on a bullish trend. What's make it to be going on a bullish trend? During our last class, I discussed about this. Like every single time you see that price break a respected level, it has to take the remaining other one. So you can see from here, price end up taking this liquidity here, official expected price to respect it. So this is a reversal in higher time frame. That is the reason why you can see all this movement that happen. Then every single thing that happen in higher time frame also happen in lower time frame, no matter the time frame you are using. You understand? So that is just it. So you can see price just end up taking this high. Where is the next high for price to take? This high. Okay, price have taken it. No, price hasn't taken it. Can you see? This high here. So this is the next high for price to take. So that is the next liquidity. So you can know that price is going to take this last high here. All the way price is going what on a bullish trend, because in higher time frame price still was going what on a bullish trend. So that is just it. That is how to understand, and then that is how to know liquidity. So I've explained buy stop liquidity for you. If you have any question about this, you can ask in the comment section. I'll be willing and glad to give you appropriate answer to it. So if you're new to this channel, don't forget to subscribe to this channel and then turn on the notification, so you're going to be seeing every single video I upload on this channel. So let's discuss about set liquidity. I just have to delete all this, sorry. So when we discuss about set stop liquidity, in set stop liquidity we discuss about you have to notice every previous month low, every previous week low, every previous day low, low of the day, old low or swing low or equal lows. That is a retail support. So every single time you see this in the market, You can see that price end up taking this low here. We have high, low, high. So you can see that price end up taking this low here. Can you see it? Can you see it? So this low was taken. Where's the next low for price to get to? We have the next low here. After that, we have another low here. And you see, you have another swing low here. So we have another swing low here. So I mentioned something when I was explaining buy stop liquidity, that is not every single low that price has to tap into or to take the liquidity. It all depends the direction that price is going to in higher time frame. So right now we have a new low here, but we are not expecting price to go below this low, because this low is not a liquidity, but this low is a liquidity. You understand? Because price is going all the way bullish trend. Can you see there? Price is going all the way bullish trend right now. Price end up breaking a structure here. We have a reversal here. Yeah, we have a reversal here. So this is the last low. We are not expecting price to get to this low and also this low. You understand? So that is just it. If you have any question concerning this, you can ask me on the comment section, and then I'll be willing and glad to give you an answer to it. So you can see every single low price end up taking it before was changing direction, going on a bullish trend. So all these ones are liquidity, all these ones are liquidity, all these ones are liquidity, all these ones are liquidity. And then what make it a liquidity, just like those levels are respected level before price end up not respecting it. So every single time you see that price is not respecting one level that was respecting before, so you should understand that price is about to take all the respected level out as a liquidity. So you shouldn't be expected to set your entry in any zone. Like for example, many people said that entry here, we're expecting price to bounce back here, so they're going to lose a lot of money there. And then some other people say they're on here, I don't know. So when you understand liquidity, you can see price just end up tapping this liquidity and then immediately going up. You can see many of it here. So some can say down also here. So that is why you'll be seeing that many traders will be complaining, oh, price end up hitting my stop loss and also going to my direction. You can say price end up hitting my stop loss and also going to my direction. That is just the reason, because they don't understand liquidity. They don't understand the different type of liquidity we have in the market. They don't know when a respected level has turned to a liquidity. They don't understand all these things. Hope you get what I mean. So you guys are going to understand this. So that is just it for sell stop liquidity. Even though we're going to be discussing about some other types of liquidity later on this mentorship. So you can see that price end up breaking this high here. So price is not respecting all this high. So price end up breaking this high. Sorry, my bad. So where's the next high for price to take? I'm just doing a little recap. You can see some people are going to set their entry here. They're going to lose some money. And then some people are going to set another entry here. They're still going to lose again. Okay, right now they can make a little profit because price has done what it wants to do by taking this high, but it's still expecting this high because it's another moment that is going to like to take this high. You can see another moment end up taking this high. Then you can see another thing that happened there. So you can see here also. Because the price just tap into the previous high and then immediately price reverse back down. Okay, so price just tap it into it a little bit and then immediately price reverse back down. So the reason why price is doing that before is just like to take out liquidity. Hope you guys get what I mean. So I believe you get what I mean, because I'm trying to explain as I could, you understand. So I appreciate me for that. So if you have any other question concerning liquidity, I'm going to like to be willing to give you an answer in the comment section. And then I've told you what make a liquidity to form. It's when a price break a certain level that we are not expecting it to break, or we are not expecting it to go above. You understand? So right now you can see that price was all the way going up right now from here. Price going up and then immediately price end up taking this low. So you should understand that price is going to take all the remaining lows that price was expecting before, except the last low. It all depends on what higher time frame is saying. So you have to understand higher time frame perspective to a lower time frame. Understand? So you can see that price end up taking this low here and also taking this low, and this low. So that just it. So I'm going to like to end the video here. If you have any question, don't forget to ask. And also the next video is going to pop out in this screen, so you can continue watching. And also if you're new to this channel, don't forget to subscribe and then turn up the notification. If you find this mentorship is going to be really helpful, don't forget to share with your friends and family that you wish to like to learn this institutional trading concept and other stuff. So see you guys in my next video. Bye. Wish you good trading and good luck.